1120 a.m. The Money Matters. This is the Money Matters Radio Network. WBNW 1120 a.m. and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Hey, listen. Are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide, AI and Your Financial Plan. It's new for the month of July. And Paul, we're hearing companies all over the investment universe talking about how they're utilizing artificial intelligence in their workplace. And one of them that's been getting more and more mention is specifically in investment design and strategy. What are you hearing from major money managers when it comes to artificial intelligence?
One of the powerful things about AI is the ability to take vast amounts of data and synthesize it down into something comprehensive that's easily usable to run portfolio models out there. So utilizing price to earnings data and other financial metrics, these AI systems can collaborate with all of the data that they're provided and come out with an outcome to rebalance a portfolio and to make certain investment decisions over time.
Now, what I get worried about is companies starting to market this stuff as something that it's not. To your knowledge, is there anything out there that is actually recommending securities based on AI that has any sort of track record?
Not at this point in time. It's really important to note that this technology is in its infancy, and while it is exciting and there is a lot to be learned and further developed here, there is no proven case that there is a perfected AI model in place that's publicly available.
The brand new guide from the Armstrong Advisory Group for the month of July is called AI and Your Financial Plan. You can get your copy by calling 800-393-4001. Again, that's AI and Your Financial Plan. Get your free copy by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Well, we are right in the middle of the most exciting week in markets. A lot going on, and things pretty quiet this morning as far as stock movements, largely because we need to see what the Fed does later today. But earlier today at 8:30 a.m. Eastern Time, we received the GDP report for Q2. First estimate, at least. This will be revised twice, at least before, larger revisions that happen, a couple of years down the road. But we're going to get revisions over the next couple months on this. But the initial reading came in at a GDP growth rate of 3%. Now, to look at this, I think it's also informative to go back to Q1, where we saw GDP fall by 0.5%. And the reason why I think it's important to go back to Q1 is because these are two quarters that show two sides of the same coin when it comes to the impact on GDP and its growth rate. So let's start with Q1 and what we saw there. The big thing that held back GDP in the first quarter of this year, at least as it's measured and reported in this report, was a significant rise in imports, which weighs against it just based on how the GDP calculation works. So imports weighed against it, inventories built, which helped it out a little bit, but ultimately you came in with that negative 0.5% when it was all said and done. What we saw in the second quarter was the mirror image. Inventories were drawn down as companies started to use their pre-tariff inventory, and imports dropped significantly, which made the second quarter look better than it otherwise would have been, same way that the first quarter looked worse than it otherwise would have been. Ultimately, Mark, where I tend to land is, let's not view these as two separate quarters. Put them in, lump them in, and you could even call them the first half of 2025, if you will, if you're still with me. And what we saw is in the first half of 2025, GDP rose at about a 1.2 to 1.3% rate based on the numbers that we have here. Is that a fair way of looking at this just in terms of the big picture?
I guess if you want to make it depends on, I think you're exactly right by caveating it the way you did. It depends on the case you're trying to make. Go ahead. No, go ahead.
The case I'm trying to make is that I don't think the U.S. economy actually changed that much from Q1 to Q2.
Yeah.
It's just a matter of when did some stuff come into the country and when did it leave warehouses.
That's exactly where I was going. It does come out in the wash. Can I put it in even longer-term perspective to underscore the point you just made, which I think is exactly the right one, and I'm not just saying that because I work for you. If you look at look, we're all spoiled. Those of us who grew up in the 80s, 90s, or earlier are really spoiled. From 1950 to 1999, the real annual GDP growth rate, gross domestic product, the variable Chuck was talking about, was 3.4%. That may not mean anything to you without context. Let me give you some. From 2000 to 2024, the same growth rate was 2%. also may not mean a lot to you, other than that the 3.4 is
3.4 is bigger than
is
2.
bigger than 2. But what has that meant over the last 25 years? It means that if we had been growing and I am going to come back to your point.
Yes.
I need to make
you're good.
I need to make one more. If we had been growing as fast as we did from the 50s to the 90s over the last 25 years, growth would be bigger by a factor of 2.3. Instead, it's bigger only by a factor of 1.64. Said differently, we're about 2/3 as wealthy as we otherwise would be. Even that lacks context because I don't know what that means in terms of standard of living, purchasing goods and services, but you know that you'd rather have one of something than 2/3 of something. It's actually quite a gap. My point is that growth this entire century has been really disappointing. And it's not just the Great Recession. It was already slowing down prior to that due to demographic and other forces. So, Chuck, to wrap it up and bring it back to your point, over the past 4 quarters now, bringing us to the present, GDP growth has been about 2%. Exactly in line with this century. So the next 4 may look different, might be lower than 2%, but
Sure.
most people think trend growth or potential growth is about 2%. You really do need to smooth these things is the point I'm trying to make. In the last 12 months have not been an anomaly relative to this century, but to those of us who grew up in the last century and have very high expectations for growth, we continue to feel like something's wrong. It's this nagging feeling you have in the back of your mind, I think, if you're of a certain age. And I'll just leave it at that.
I thought that was just me getting older.
Well, yeah, that's part of it. You remember the halcyon days of your youth. Like, why am I not having fun all the time anymore? Why is the economy not growing as fast as it was anymore, et cetera, et cetera? And you're not wrong if you got this nagging feeling that something went off the rails.
Something actually did change.
Something very significant changed in the trend of GDP growth.
So, in terms of where we go from here, what does this all mean for the second half of the year? The first thing is I don't know exactly which way imports, exports, and trade are going to influence monthly or quarterly fluctuations in GDP. So, quite honestly, the way that I'm looking at GDP for the foreseeable future, take that out and don't worry about it because it's going to come out in the wash. If one quarter has higher imports, let's say there are a bunch of imports that are happening right now to try to beat this August 1st deadline. Okay, am I going to, weigh down Q3 and say, well, it's bad because there were a lot of imports, in the month of July? No, it's going to come out in the wash later on. So I'm kind of saying, look, let me not look at trade for a minute and let me look at actual consumption because consumption is what powers the U.S. economy, and not just consumption by households, but also I guess I would say consumption and investment. Those are the two vehicles effectively that we're looking at. And the nice thing is in the GDP report, we have a measure that conveniently basically wraps all of this up. It's called final sales to private domestic purchasers. That's a fancy way of saying, hey, how much stuff did households buy in order to, consume, and how much stuff did businesses buy in order to invest in the country? And here's the trend that's concerning, and this is the one to watch because I think this is a good measure. There's a reason why this statistic is often called core GDP, is because it strips a lot of that other stuff out in the wash. The reason why this matters is ultimately, again, we're a consumption-driven economy, and here's the concerning piece on it is here's the trend for the last 4 quarters. Q3 of last year, 3.4%. Q2 of last year, 2.9%. Q1 of this year, 1.9%. Q2 of this year, 1.2%. It's been on a downward trend since Q3 of last year. So, ultimately, the second half of the year, in my opinion, when it comes to where GDP is going to land, it's going to be about this. Does that downtrend continue? Or do we see it stabilize or even reverse? And there are paths that you can believe for each of those outcomes. It's something where any one of those 3 is possible, and we just need to see what comes of it. Let's take a quick break. When we come back, I want to discuss what those paths look like where GDP can start to ramp up again as we head into the second half, where it stagnates, or where it falls off and then we've got some problems. We'll discuss that when we return.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
All right, so we've been talking about the Good Pub report, more commonly referred to as GDP. And here's where we are. First half of the year, GDP grew at somewhere in the range of 1.25%. With the final revisions that we'll get, maybe it's 1%, maybe it's 1.5%, but low ones is where it looks like. And so where does it go in the second half of the year? There's three paths that you can take, obviously. Up, sideways, or down. I'm not going to say that I know which one it's going to take, but I'm going to lay out the paths that I see in which it could plausibly take any of these three. The first one, how does this get better? How does it improve? Okay, you've got a little bit more tariff certainty now, even though, later this week we may be getting some new tariff rates, so, your mileage may vary. And so companies feel more confident investing at this point and spending money. On top of that, the reconciliation bill had a bunch of provisions in there for expensing CapEx and R&D and things like that. And so companies may decide to utilize those provisions and get that money back into the U.S. Maybe as a result of that, corporate travel picks back up. People feel a little bit more solid on their footing, and so leisure travel picks up. The tariff impacts are absorbed. And you kind of go from there. And, oh, by the way, there's this AI boom that's going on, and that continues, unabated. That's the path to things getting better in the second half of this year. The path to things staying the same, low to mid 1% GDP growth. Hey, all of that stuff related to, CapEx and R&D is nice, but it takes a little while for companies to move because they don't just have these projects where they're, ready to go shovels in the ground tomorrow. And so maybe that doesn't come until, next year, a little bit later. Travel basically stays the same, kind of what we've been hearing from all the travel companies, where the airlines and hotels pretty much said, yeah, we saw a negative impact to travel in the first part of the year, but we've stabilized at lower levels. Housing continues to be a modest drag on the economy because of lower overall activity levels. But by the way, there's still this AI boom that's going on, and so that, is kind of the thing that powers you forward, even with the rest of the economy, kind of trying to figure out which cylinders to fire on. Okay, you get, low 1% GDP growth, and there's no recession because of that. Nothing, awful happens. It's just one of these periods where you've got a little bit of slow growth before things, recover and move a little bit faster next year. The path to things worsening, again, you don't really get any, help from the reconciliation bill. Tariff impact starts to really be felt in the third quarter. And by the way, now you have these higher tariffs that are going to be kicking in, as we get into later in the year. And so companies are raising prices. Wages don't keep up. And in fact, maybe you end up in a situation where companies start laying people off because higher prices without higher wages usually means lower sales volumes. And so companies say we got to get leaner in order to deal with that. And housing continues to slide. Maybe construction, drops further, which leads to layoffs there. And so you've got problems on that end. So I think there are plausible paths to things going down any one of those three paths. The weightings are probably not, a third. I think they're probably a little bit skewed towards stagnation. Not stagnation in terms of, things worsening, but I think they're probably a little bit skewed towards pretty much things looking a lot like the first half, just because I think the risks may balance. But there's some downside risk, and, I think upside in the next couple quarters might be tough to find, but I think there's undeniably, because of the potential for increased business CapEx, some real upside as you look into next year as far as where things could go. But these are the paths that we have for GDP, and ultimately, we're going to have to see how these next couple quarters look, because I do think that there still is some uncertainty about exactly where it could go.
Yeah, I think absent any other special knowledge, which I would argue none of us have, your best guess of next quarter's GDP is last quarter's GDP. You've all heard the expression random walk. That's what a random walk is. And that implies persistence. That implies what happened last quarter affects what happened this quarter. And if you, to be fancy, iterate forward, if you plug in the definition of last quarter as being the previous quarter as being the quarter before that, and so on and so forth, as a good researcher would do, you see there's persistence in GDP. Said differently, Well, no, I'm going to say it that way. GDP is a little bit persistent. So unless you have a very strong view about this quarter's growth being due to one-offs and last quarter's growth due, and you may, by the way, last quarter's growth due to being one-offs, your best guess is what happened last quarter, or maybe you accumulate as you did. You add the two, divide by two, and say we're on a slower trajectory than we were previously. Trend GDP, which is a term researchers use for the potential growth in the economy, or maybe I should reverse that. Potential is the definition of is a proxy for trend, is probably closer to 2. So it looks like under the hood, decomposing it as you did, Chuck, we're growing it a little below potential. Question is, does that portend further deceleration into the clinical recession, as the folks at NBER label a broad slowdown, or does the economy pick back up? Said differently, is this just a growth slowdown, or is it something? Do you just have a cold, or do you have a serious illness?
Right.
Speaking of the economy here, obviously.
And when we get a little bit more granular, like where did the growth actually come from? I know that I kind of use that final sales to private domestic purchasers as the be all end all, but when you break it down, like what's actually happening? So in Q2, goods spending increased at a 2.2% annualized pace.
Okay.
In line with trend. Like there's nothing there where you look at that and say, yeah, that's crazy high or low. Like you could realistically say, okay, that can probably continue, and that's, it's possible, but there's nothing crazy there. Yeah. Services spend increased at 1.1%. Okay, it's slower than the last couple of years. I could see the reasons why that might have been the case. You can make a case for improvement on that side. Yeah. So, okay, that's a way that GDP could get better. Mm-hmm. Gross private domestic investment fell at a clip of 15.6% on an annualized basis. But, again, this is one of those areas that's heavily skewed because of how it's calculated and what goes into it, because in Q1 it rose to 23.8% clip. Obviously, like those two things didn't change in that fashion. So let's look at the big thing that we see there that I do think is going to continue to be a drag, and that is residential spending, which declined at a rate of 4.5%, accelerating down over the last 2 quarters. Residential spending is declining because home prices are falling and builders don't know how to make money with falling home prices. Mm-hmm. There is no change in that trend. In fact, it's worsening. Home prices in much of the country are now moving down at a quicker rate than they were in the prior couple of months. So that's something that I expect to worsen. On the other side of things, investment in non-residential structures declined over the first 2 quarters of this year. Okay, this gets at, business CapEx intentions and things like that, which still are pointing in a negative direction. Is it that negative? I don't know about that side. So I think you look at that and you say, okay, there's a case that this, the one big beautiful bill could spur some additional CapEx, but does it happen next quarter? How quickly do those plans turn? This is kind of the ball game that we're looking at here. Yeah. So there's a lot to look at as far as where this economy can go, but ultimately, I think households have a little bit of room to pick up spending, actually. In the aggregate, I know a lot of you listening might be saying, Chuck, I don't have any room to pick up spending. I'm stretched thin as it is. So I think there's a little bit of room on that side. Housing is very likely to continue to worsen, which could be some additional drag. And so the question is going to be, how does this all end up balancing out? Where do we get to? That's the big one for the second half of the year. Quick break here. We got Wall Street Watch, and Ask Todd is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next,
Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Big day on Wall Street with a Fed decision on interest rates due out at 2, followed by a press conference from Fed Chairman Jerome Powell at 2:30. While rates are expected to remain steady, there will be more attention at this meeting to see if there are potential dissenters among Fed governors in favor of cutting rates. Investors also digesting a second quarter GDP reading, which showed the economy grew 3% in the previous quarter, above forecasts of 2.3%. Right now, the Dow is up by 0.2%, 87 points higher. S&P 500 also up 0.2%. NASDAQ is up 0.4%, or 81 points. Russell 2000 is up just over 0.5%. 10-year Treasury yield up 3 basis points at 4.364%. And crude oil up about 0.5% higher, trading at $69.58 a barrel. Palo Alto Networks has agreed to acquire identity security provider CyberArk in a deal valued at about $25 billion. Palo Alto stock is down 7% on the news, while CyberArk shares are down by 1%. Meanwhile, Starbucks shares down by about 1% after CEO Brian Nichols said the coffee chain's turnaround plan was ahead of schedule. The company also said it would move away from operating stores that only accept mobile orders for pickup. Elsewhere, the Wall Street Journal is reporting that Amazon will pay the New York Times between $20 and $25 million per year to license its content to train AI models and feature Times excerpts in its products. Amazon stock is dipping after its double-digit slide yesterday due to a cut to its full-year guidance. Novo Nordisk shares down another 6% today. And after today's close, we'll see more Mag 7 earnings from Microsoft and Meta. Qualcomm, ARM Holdings, Ford, and Robinhood will report their results as well. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
And we've got Todd Lutzke here in studio to help answer your estate planning questions. Phone lines are open. 888-205-2263. That is the number to call to ask Todd your estate planning questions. A reminder, we do have limited space on those lines, so get calling early and often if you want to get some time with Todd. Again, 888-205-2263 is the number to call to ask your estate planning questions live on air right now. One last time, that is 888-205-2263. Mr. Lutzke, how are you doing today?
Never better, Chuck. How you doing?
I'm good.
Awesome.
I was out at a bar the other night.
A bar?
This cowboy walked in.
Oh, yeah?
He had a paper towel he was using as a bandana.
Okay, that's
and
weird.
The bartender goes, "Hey, you can't come in here. You got a bounty on your head."
That's good.
And he left.
He left, yeah.
Todd, I want to talk to you about last-minute planning to try to qualify for Medicaid. Obviously, I know it's preferred by you and probably most estate planning attorneys to plan ahead. But listen, we're human. Sometimes we don't plan ahead.
Or things just happen, right?
Correct.
Accidents happen.
Unexpected things.
Unexpected.
If someone you know or you has a situation with long-term care that is imminent, either you're already going through it or you're going to in the next couple weeks,
yeah,
what are the tools available at this point to help deal with that?
So I'm going to start off by saying please just call an elder law attorney, because that's the first step, really. It seems silly, but it is, because so many people will just think on their own that there's nothing I can do. And the nursing home will certainly tell you that, it costs $15,000, $16,000 a month, and can you please just write the check? And lots of times people unaware that there's things that can be done will just comply, because remember, that's a really emotional time right then. You're dealing with some real heavy emotional situation, so they'll just comply. So first step is don't do that. Second, once you get a hold of somebody who knows, there are things that you can do. There's, are you married? If you have a spouse at home, you have a lot more options perhaps than you do if you're single. Doesn't mean if you're single you don't have any. There are, assets that you're going to have to look at. You're going to have to look at your whole asset list and say, well, I've got a home, I've got a rental property, and I've got an investment portfolio. Well, assets, the kind of assets you have, are treated differently from what we call a countable versus a non-countable status. So there are some assets that, believe it or not, when you're going into the nursing home, are non-countable. And the one that most people have is a home. And most people have that home as their most valuable asset. And so, good news, single or married, the house at least is non-countable. Now, if you're married, and again, different treatment of assets for different situations. If you're married, it's not only non-countable, there's no value limitation, and it's non-lienable. It's just not available. Beautiful. It's not the way to go, though, but at least it'll help save the asset. If you're single, you have to check a box that says, I intend to return home on the application, and it'll be non-countable, but lienable, but you'll be on Medicaid, which is better than not being on Medicaid. And lastly, there is a value limitation with a single person. The house can't be worth more than, actually, that's changing. You heard about the BBBA. So for single people, it used to be here in Massachusetts, it was like $1.1 million, I'm going to say, right around that value. If it was more than that, you were just denied Medicaid. Now, across the country, it's going to level out at $1 million for everybody. So unfortunately, I think it's still some things that need to be cleared up in this bill, but the way it reads is that's going to fall back. So in Massachusetts, we actually have to go back to $1 million valuation limitation on a house. But things can be done, though.
Talking with Todd Lutzke from Cushing & Dolan. We've still got room on the phone lines. If you have estate planning questions to ask him, this is your chance. Todd's going to be answering questions live on air right now. Phone number is 888-205-2263. We do still have a little bit of room on those lines. So again, 888-205-2263. But call quickly just because, again, there's only so many people that we can get to. We're going to take a quick break now. When we're back, right to your calls with Todd. That number again is 888-205-2263.
Ask Todd with Todd Lutzke every Wednesday at 10:30. Only here on the Financial Exchange Radio Network. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
All right to your questions with Mr. Lutzke. First up, we've got Donna in Mashpee. Donna, you are on with Todd Lutzke.
Hi, good morning. Thank you.
Go ahead.
I'll try to keep this uncomplicated as it is.
Sure.
For a year now, I have a credit shelter trust and a state tax plan with tax planning provisions. So it's split. My husband and I, all assets are 50-50. The house is 50-50. Our assets are 50-50.
So you have a husband and wife trust, and they're revocable, correct?
They're revocable, that's right.
For now.
Until the first passes.
Correct.
When the first passes, that is split into an exempt and marital.
Correct. It's a marital share and a remainder share. Got it.
But my question, and it's funded up to $2 million. There will not be $2 million in that, and I'm wondering if the tax tail's wagging the dog, and if there's no $2 million in the first, why can't we just wait until the second passes? The first passes, the second makes those decisions. And the other part is I have two trusts for each daughter. One is special needs, and the other is just a credit shelter for her. And when the first dies, both of those girls' plans are irrevocable. And we're feeling like our hands are tied right now with those decisions
let me ask you,
a year ago.
Let me ask you a couple of questions first, because this is not so. So these two trusts that you talk about for the kids, those shouldn't come into play until you're both dead. Is that correct? Because
no, that's not the way it's written. It's written when the first spouse passes, those trusts become irrevocable.
Okay. No, I'm asking a separate question. So I know you have a husband trust. I know you have a wife trust. And then you said there's trust for your kids. Are those separate documents right now, or do those okay, so first of all, those should be empty, and I don't think you need separate trust documents for your kids. That's first and foremost, something's wrong there.
Well, special needs is different.
No, I get the special needs. And I'm still going to stick with my comment. Unless you want to put money into that special needs trust for your kid right now, which I don't think you need to do, because you could take care of your child, I would think, on your own. And so I would not have that. Only time you have a special needs trust set up when you're both alive for your child is if you have other family members who might want to contribute to your child's well-being now. Other than that, the special needs language should be built into your husband and wife family trusts that get funded when you both die. Okay? Now, before I address your husband and wife family trusts, are you guys worth more than $4 million?
With house, IRAs, and everything?
Everything.
Close. It's just close. It's
Good.
probably
Good.
3,
Good.
but 0.5.
Good. So if your trust is, let's call it 3.5, perfect answer. If your trusts, if you have 2 revocable trusts in place right now, first of all, with $3.5 million, depending on how old you are, I would be asking, are you concerned about protecting assets from the nursing home? Is that a concern of yours?
Well, we were told if we put the house in irrevocable, they'd be protected, but we don't want our hands tied with that.
Well, I'm just asking the question.
Right.
Is it important to you to protect from the nursing home if you could?
No, I don't think so, because we want the freedom of having our money.
I understand that, but these revocable trusts, if explained right, you can get a lot of control and protection. But leave that off for now. So then with revocable trusts, and I get it, you already have 2 trusts and you shouldn't. You should have 1. You need a revocable joint trust so that, to your point, your main point is that $2 million bucket going into the remainder share. And you were right. Todd, what if we don't have $2 million to shelter? Because we split the assets between the 2 trusts. So I have, 1.75 in each bucket. Well, that's not going to help, or depending on how much your IRA is. But what you do with a joint revocable trust is you put everything in, and now on the first death, everything that's in that trust will be able to be transferred between the remainder share and the marital share. And the reason you cannot wait is because on the first death, I want to be able to shelter whatever amount we can. If it's $2 million, great. If it's $1.5 million, great. Why? Because on the second death, if you don't shelter on the first death, the survivor will be worth more than the estate tax exemption, and you will pay taxes. Example quickly. If you're worth 3.5 and you do what you were asking, well, why can't I just let everything go to me and then I'll make the decisions when I die? Because 3.5 is bigger than the Massachusetts $2 million exemption, and now your kids will unnecessarily pay estate tax on the amount over $2 million. But if I can shelter something on the first death in a remainder share, now let's say I sheltered even $1.5 million. Well, on the surviving spouse's death, there won't be any tax due because I'll be less than $2 million. So lots to think about here. I think you might need a second opinion. Not excited about the way your plan is necessarily set up. But you know what, folks? That's exactly why you call, to learn about these things. And that's why you get the guide we're giving away this month, which is Last Minute Medicaid Eligibility Planning. It is a guide that tells you last minute what you can do. Now, great, Donna's trying to do planning in advance, which I love, but there are people who end up facing these situations last minute. Don't write the check. Get the guide. Learn about how countable and non-countable assets are treated. Learn how things are treated. Learn even how you can avoid the 5-year waiting period sometimes last minute. Get the guide, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, I got another one queued up for you here. Let's go to Steve in East Bridgewater. Steve, what's your question for Todd?
Yeah, thanks for taking my question.
Sure.
Vehicles, I have a trust.
Mm-hmm.
Is it worth putting a vehicle, like a car, truck, whatever, personal, into the trust?
Is your trust revocable?
No.
Yeah, so irrevocable. So either way, I just asked that to clarify for everybody else. Either way, no, we almost never do that. So there's really no reason to be putting a car in a trust. It's a depreciating asset. It just doesn't really do much, and it's very easily transferred at the registry. They have forms on that. So I would say no on that.
Todd, we got one more for you here. Let's see if we can get through it. We got another Steve. This one's Stephen in Franklin. Stephen, you got about a minute or so. What's your question for Todd?
Hi, Todd. Just got a quick question. It's kind of a general thing.
Uh-huh.
I've never trust or a will. I'm looking to maybe do a will.
Okay.
My wife has a couple businesses. We have a second house. So I'm just trying to maybe meet with someone and maybe just establish all this.
So whenever I hear people say they want a will, to me that's the layperson saying I want an estate plan. Because a will, although we do them and they are a part of your overall, quote, estate plan, they're really the least important document in the estate planning file. All right. I want very little to be addressed by the will because it goes to probate if it's addressed by a will. So for you, a trust would be the bigger piece of the estate planning pie. And as you said, there's a couple of businesses. You own a second house, which leads me to believe you must own a first house. And you start adding up everything. Again, like I asked the other caller, are all your assets, when you add them together, north of $4 million or under, which is the mass exemption?
Probably around there, to be honest with you.
And how old are you?
I'm 50.
Yeah. So I would say you're in the right category to do basic estate planning. I don't think you need a lot more than that. But I do think you should sit down with someone and learn how these probably either revocable or irrevocable trust works. Probably revocable trust in your situation, how they work to avoid probate and reduce the estate taxes and take care of the family. So hope that helps.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still a bunch to get to in hour two, including a preview of this afternoon's Fed meeting. We're going to be talking a little bit about what's going on with yesterday's JOLTS report as well. Some interesting data there. And then also more on earnings. We had Visa reporting earnings, so we'll tell you what they told us about how the American consumer is doing. All that and more is coming up in hour two. Stick around.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix. Lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. the U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide for the month of July, AI and Your Financial Plan. Paul, one of the big areas that is a pain point for a lot of folks is working on their budget. It's kind of the step one for your financial plan. And I know there's a number of tools that are starting to incorporate AI in their budgeting plans. How is this starting to work and benefit folks?
Yeah, like you mentioned, Mike, it's an area which is really difficult. You ask a lot of the clients that we meet with on a regular basis, how much do you spend on a monthly basis? Simple question, but hard to come up with that answer. What these AI tools can do is aggregate all of your total spending together, categorize different areas, and use that data to try and project what you may spend in the future. This is a critical step in the retirement planning process to get a sense for what are you spending today and can you afford to spend that much in the future. It is important to note, certainly, that there are drawbacks that come with it too.
Yeah, talk to me.
This is a technology that's in its early stages, and it's only as good as the data that's fed to it. There can be some issues sometimes with properly categorizing certain types of expenses expenses over time. And as such, you have to be very careful when you're using this type of technology and perhaps vet it against your own assumptions through that old school spreadsheet fashion as well.
It's always a good idea, but especially when we're talking about brand new emerging technologies. Folks, the brand new guide from the Armstrong Advisory Group is all about AI and how it could affect your financial planning strategy. If you would like to get your free copy, call the Armstrong Advisory Group at 800-393-4001. The guide again is AI and your financial plan. It's available at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Kicking things off, it's Chuck, Mark, and Tucker with you, and we're right into the heart of a really busy week of economic data and earnings. And thus far, it's been pretty boring for markets, quite honestly, but that's just because the Fed is this black hole that just, sucks in all the light around it and makes it so that nothing else really moves it on a Fed day. But you've got the Dow Jones Industrial Average off 12 points. The S&P 500 is up 6 points. The NASDAQ, a little bit of movement there, about 1/3% green, 75 points up. And so, again, pretty quiet in advance of the Fed. Not unusual on a Fed day, but we did have an awful lot of data this morning, including the first look at second quarter GDP, which came in at a 3% clip. This largely because the import boom that happened in Q1 was then followed by an import decline in Q2. And so based on how GDP is calculated, it weighed on it in Q1, it boosted Q2. Ultimately, you look at it and you say, hey, first half of the year, GDP grew somewhere in the 1.25% range, give or take, maybe 0.25%. So we'll have to see where that evolves to. Big thing is that when you look at what's going on under the hood, when you strip out the trade stuff that can make it volatile from quarter to quarter, again, I don't think we suddenly thought that, the economy fell off a cliff in Q1. I don't think we suddenly thought everything's fine in Q2. Underlying private demand, probably running somewhere in the 1 to 1.5% range right now, and we'll have to see how that evolves as we get into the second half of the year. 10-year Treasury is reversing some of yesterday's gains. It's now up 4 basis points to 4.368%. Oil is up 38 cents a barrel to $69.59 on West Texas Intermediate, and gold is down $25.80 an ounce to $33.55 and 40 cents. Mark, everyone is all excited about the Fed meeting this afternoon, which I actually don't think is going to be that consequential. There's a whole lot of, I think, hope that we get, a couple dissents about Fed policy, and gosh, that could make it dramatic, but ultimately a couple dissents don't actually lead to a change in policy, so what are we looking for here? Let me ask you two questions. What are expectations, and do you believe dissents matter when it comes to monetary policy?
If you don't mind, I'll start with what the Fed does, because I think it's important to keep in mind what we expect of them when you start to judge what they're doing or what they ask what they should be doing. The simplest way to think about the Fed, which, among other things, controls the money supply and uses their control over the money supply, and that's literal, how much money is sloshing around in the economy. They use banks to do it, but effectively they control the amount of money available to meet the demand for economic activity. You could think of the Fed's function as being a thermostat. When the economy gets too hot, their job is to cool it down. When the economy is not operating at its potential, which is just a different way of saying it's cool, I suppose, their job is to stimulate demand, and they do that through their control of the money supply. They print more, lowering their short-term target rate, so-called Fed funds rate, and that makes its way over the course of a few to several quarters into the real economy. So that's what the Fed does. You could think of it simply as the Fed, through interest rates, controls demand. That's what you'd see in a textbook in economics.
Sure.
And that's an oversimplification, but not much of one. So, to your question about what are people expecting, think about the thermostat analogy. Is the economy running above its potential? Too hot, that is? Is it way below its potential? Too cold? We just got to read on first quarter GDP, which you summarized. Tough to extrapolate too much from. You wouldn't want to annualize or extrapolate too much from that, I don't think, because it may not be representative, so you have to smooth it out by taking more observations than taking an average. Over the past year, the economy's grown about 2%. I'm going to say, as much as it might be a little bit contrary to the consensus view floating around in the ether out there, that the economy's operating at about trend or potential, somewhere around 2%. Might be a little slower than that.
Sure.
I'm not going to argue that point. And honest people can disagree. But
your point would be, does a little slower merit a change?
Does it portend a further slowdown? In which case, the Fed, acting as our economic thermostat, has to heat the economy up, which would make an argument for lower rates, thus stimulating demand. Alternatively, is the economy light? Now, the Fed's always going to be a little bit forward-looking. This is not a perfect, the thermostat analogy is not perfect. A better analogy is these modern programs in which your thermostat is plugged into your utility, where it pre-cools or preheats ahead of expected demand.
Yeah.
The Fed is acting
a smart
more,
thermostat, if you
The Fed
will.
is acting more like your smart thermostat by pre-cooling or preheating, because it knows it's. Imagine if your furnace was very far, or your air conditioner was far away, and it took time to reach for the cool or hot air, assuming a forced hot air system.
So you're talking about real central air, where there's just a huge air conditioning unit
downtown
in Illinois, and it just spreads it out to the entire country.
You can picture the Romans having tried something like that. I guess aqueducts were kind of that way. They probably created a little bit of draft, although not the kind of draft you'd want wafting through your house, considering what flowed through some of those things. But anyway, so don't get too hung up on monetary policy and the arcane specifics of what the Fed does. Think of the Fed as a thermostat, and much like modern thermostats, they try to preheat or pre-cool because you don't know exactly where the economy is at a point in time or where it will be. So to answer the second part of your question, Chuck, what should the Fed do relative to what's expected? They should do what is expected. You don't want to surprise markets absent a very good reason to surprise markets, because markets will infer from your surprise that you know something, or more accurately, fear something that people aren't adequately appreciating. Surprising markets is generally a bad thing. Suppose they hike today. That would be a shock. People would be passing out, and not from the heat. They would infer from that action that the Fed thinks tariffs are going to be far, or they have real substantive concrete knowledge that tariffs are going to be more inflationary than people fear, for example. So you don't want to surprise markets. You want to keep them going slow and steady. And for those of us at home watching this, keep the thermostat analogy in mind as to what the Fed does. That'll help you filter out some of the noise and, frankly, just some of the bad reporting from the financial press surrounding events like today.
So, with that in mind, do dissents matter?
Oh, I'm sorry. That was like a part B or A of that question.
No,
maybe it was the
all
second
good.
part of the question. Yeah, they do. If you think about what the Fed is, the only reason the Fed talks to the public is that they're trying to keep inflation expectations under control. Full stop. It's the only reason for the press conferences, for the
Jay
public
Powell doesn't
remarks.
like doing it.
No, you can tell he's sort of a reluctant a spokesperson, if you will. And for decades, the Fed did not talk to the public. But in the 70s, we realized inflation expectations matter. They contribute to the persistence of inflation. And the Fed realized they can control expectations by projecting certain things to the public and make for self-fulfilling prophecies that way. So dissents will matter because people will infer that there might be a chance of dissents either way matter, I suppose. Those dissenting blocks, if they have a persuasive argument, could become majority blocks in the next, 6 weeks when the FOMC, Federal Open Market Committee, the decision-making body, meets again. So, yeah, I think they do matter. And you can't ignore the politics, right, Chuck? There's a political backdrop here that cannot be ignored. The president is going to put a flunky at the Fed in less than a year. And I don't use that term lightly. I mean, he's going to put a toady, a flunky, someone who will do his will, or so he thinks. That institution is about to change dramatically, and these dissents may give us a sense for how things are going to shape up, especially if it's somebody like Waller who seems to be posturing for the job.
Let's take a quick break here. When we return, we've got a little bit of trivia coming up next.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Artificial intelligence isn't just the future, it's already shaping how people think about their money. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've put together a new guide called AI and Your Financial Plan. In it, we explore the ways that AI is being used in financial technology, from apps that track spending to tools that can help identify trends. It's a rapidly changing space, and this guide is designed to help you understand some of the potential benefits and risks that AI may present. Want to learn more? Call 800-393-4001 and request your free copy of AI and Your Financial Plan. That's 800-393-4001 or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now. 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That is dav5k.boston. Time for trivia here on the Financial Exchange, and today is Arnold Schwarzenegger's 78th birthday. Schwarzenegger has had a remarkable career, starting as a bodybuilder before becoming a wildly successful movie star and finally as a politician. So, trivia question today. What year did Arnold Schwarzenegger become governor of California? Once again, what year did Arnold Schwarzenegger become governor of California? Be the fifth person today to text us at 617-362-1385 with the correct answer. You win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
As we go through second quarter earnings, one of the things that we are starting to get are the indications from companies as to how tariffs are impacting them. And pretty much across the board, we're seeing, some fairly sizable numbers from different companies. General Motors, when they reported last week, they said, look, tariffs are effectively eating up 29% of our profit when it's all said and done. Stanley Black Decker said earlier this week they expect an $800 million annualized hit related to tariff policy. Conagra Brands said they expect an annual increase of about $200 million in the cost of their goods sold. And so you're starting to get a sense of where these numbers are. And I got to tell you, a combination of things. A, how far this market has run, and B, the numbers that we're actually seeing from companies. You're generally seeing companies that are reporting earnings struggling, in particular if they're missing expectations. And I think this is the first sign of, kind of where this is starting to actually have an impact in the U.S. economy. We've said all along, look, if you are adding this additional cost, it has to go somewhere in the system. We're starting to see signs of it popping up in the system now. But even at this point, it still is kind of a ramp up. The estimates that I've seen now for June, based on the trade data that we got yesterday, the average weighted tariff rate on imports in the month of June climbed to just north of 10% from somewhere in the mid-7s in May. So you're still ramping up. And remember, when something's imported is not when it is sold. It typically has anywhere from 30 to 90 days between being imported and actually ending up on a store shelf. So the expectation that I think we have right now is that you're going to see further impacts as we get into August and September, because the products that were imported in June are typically sold, in that time there.
Tariffs are supposed to cause pain. That's the whole point. They're supposed to induce consumers to switch to domestically produced stuff, and similarly with manufacturers to switch to domestic inputs. Unless you have some other objective for tariffs, maybe to raise revenue, in which case they're still supposed to cause pain.
Right, there's no free lunch.
Yeah, perfect. So why the administration keeps saying other countries are going to pay these, or the Tooth Fairy is going to pay them, or whatever their latest explanation of why tariffs will impose no economic pain, why they will constitute a free lunch, to use your expression, is kind of bewildering. Just admit, yeah, they're supposed to cause pain so that you start buying stuff that's made here. And just admit that that's going to cost more. It results in other inefficiencies. You don't have to quite go that far if you're a politician, I guess. And that's why ultimately they'll be inflationary. For how much and for how long depends somewhat on the Fed, I guess.
Yeah, it still is an open question as to exactly what we see from inflation and how long it lasts. Yeah. And not just the Fed, but also tariff policy. Does it continue to evolve over time? We've got new rates that may be hitting. We've already had some that have hit, in recent days and weeks with the deals that have been struck. Those rates are ramping up from, baseline of 10 to 15 in many cases, in some cases higher than that. And so, hey, if we continue to raise tariff rates over time, how does that impact companies and the inflation picture as well? So there are still a number of open questions as we go into the second half of the year, I think.
I'm amazed at how bad the reporting has been on some of this, the reporting of the explanations and the likely effect of tariffs. If you're confused about this subject, I am too. I don't want to speak for both of us. I'm definitely confused. And on top of that, there's a lot of stuff we don't know. These deals have not yet been published.
They're not going to be ratified by Congress, so these are not things that are going to be made
so the
permanent
next
in that
Congress
fashion.
could wrest that power back from the president and void all this stuff.
Well, there's also the chance, remember, starting tomorrow, you have the appeal of the International Court of Trade ruling that was, I think that was late May or early June, that said, no, the president does not have the authority to have these tariffs in place based on, the emergency powers that are granted that he was citing. And so depending on how those appeals end up playing out, there still is an open question right now, at least, as to the statutory authority. And we could be sitting here, 6 weeks or 3 months from now, depending on, whether this gets all the way to the Supreme Court, saying, okay, do these actually stay in place? We still don't know.
Right. And you've told stories of people purchasers or owners of businesses who have put their plans on hold or are dramatically changing their business model because of this tariff uncertainty. So that's another sense in which policy, I'll just call it chaos for lack of a kinder word, has real economic effects.
So I think where we stand right now is there's still a great deal of uncertainty because, again, these tariffs could be ruled that they're not able to go into effect. We could see higher rates that go into effect and stay in effect. We could see multiple, continued hikes in these tariff rates. We don't know exactly where these are going to go. It still is somewhat of an open question as we get into the second half of the year. But ultimately, we are hearing from companies now, we've got some money that we're having to allocate towards paying these tariffs. We may, in some cases, Procter & Gamble yesterday, I think it was,
that's right,
indicated that they would start pushing through tariff-related price hikes on about a third of their products, they said. So it's going to be something where Q3 is where it seems like you're going to start seeing it really showing up. And we'll have to see how the U.S. economy evolves as that becomes, kind of more of a fact of life, I guess.
Am I right when I say higher prices are the point to get you to, or am I thinking about this too textbook rigidly? Aren't they? Isn't that the point to get us to substitute away from foreign goods?
If you want to produce domestically.
Right, which I think is
There are two ways that you can do it. You could impose external costs, tariffs, on imports, or you could subsidize domestic production.
Yeah, okay, that's fair to give us a cost advantage that way.
Those are the two ways that you can basically go about it if you want to.
Yeah.
I'm not saying either is right or wrong. It's just like those are the mechanisms that you can use here. Yeah. The thing that you don't want to do is, quite honestly, what Josh Hawley is proposing, which is, well, we want to give people money in order to help them pay the tariffs.
Can we talk about that?
Yeah, let's take a quick break and discuss why stimulus checks to help pay for tariffs doesn't make sense right after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? but you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Big day on Wall Street with a Fed decision on interest rates due out at 2 o'clock, followed by a press conference from Fed Chairman Jerome Powell at 2:30. While rates are expected to remain steady, there will be more attention at this meeting to see if there are potential dissenters among Fed governors in favor of cutting rates. Investors also digesting a second quarter GDP reading, which showed the economy grew 3% in the previous quarter, above forecasts of 2.3%. Right now, Dow is down by 0.1% or 62 points lower. S&P 500 is edging only 2 points higher. NASDAQ is up about 0.2% or 44 points. Russell 2000 is up nearly 0.6%. 10-year Treasury yield up 4 basis points at 4.372%, and crude oil up about 0.5%, trading at $69.59 a barrel. Palo Alto Networks has agreed to acquire identity security provider CyberArk in a deal valued at about $25 billion. Palo Alto stock down 5%, while CyberArk shares are up slightly. Meanwhile, shares in Starbucks are down by about 0.5% after CEO Brian Nichols said the coffee chain's turnaround plan was ahead of schedule. The company also said it would move away from operating stores that only accept mobile orders for pickup. Elsewhere, after its double-digit slide yesterday due to a cut in its full-year guidance, Novo Nordisk shares are down another 6% today. And after today's closing bell, we'll see more Mag 7 earnings from Microsoft and Meta, Qualcomm, ARM Holdings, Ford, and Robinhood will also report their results as well. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked the trivia question, what year did Arnold Schwarzenegger become governor of California? That would be 2003. David from East Hampstead, New Hampshire, is our winner today, taking home a Financial Exchange Show t-shirt. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mark, during the last segment, I mentioned at the end, when we were trying to, I said, look, we're still sorting out exactly where the tariff cost is going to be absorbed, this and that. We're seeing, some signs of it in a few different places. And then I mentioned that on Monday of this week, Josh Hawley, who is a senator from Missouri, put out a proposal for tariff rebate checks going out to people. I'll quote from his website just because I want to, again, use his words. Today, U.S. Senator Josh Hawley introduced the American Worker Rebate Act, legislation that would send rebate checks to working Americans following the historic revenue accrued through President Trump's tariff policy. The American Worker Rebate Act would provide a tariff rebate check this year to American workers and families with similar parameters to the direct payments passed by Congress in 2020, ensure the amount of the rebate is at least $600 per adult and dependent child, and allow for a larger credit per person if tariff revenue exceeds current projections for 2025. So, talk to me about why this is a bad idea.
Well, rebates generally are reserved for economic emergencies, sharp fall-offs in total demand in the economy and spending, and you want to give those a boost. Problem with rebates, there's been a lot of literature on rebates because we've been using them once or twice a decade since the 1970s.
We went pretty heavy in the last few years.
Yeah, we did. Yeah, we went nuts. Right. The problem with rebates, and if you're a Milton Friedman fan, if you're listening to this show, you might tilt to the conservative end of the economic spectrum like I do. I'm just sort of making an assumption based on who listens to talk radio. You know the name Milton Friedman. He and other people separately came up with this idea called the permanent income hypothesis. Sounds fancy, but it's really simple. It says you don't spend windfalls. You spend based on your expected average future consumption over the course of your life. So you take a windfall, and if you expect to live another 30 years, you're going to only spend 1/30 of that, is what permanent income hypothesis says. Is that borne out by the data? Not really. Sometimes people spend more. It depends on your income. It depends on other things. But it's a really useful starting point. People don't spend windfalls blindly, is the theory that Friedman posited. Again, the evidence is kind of mixed, but it's a good rule of thumb to start with. So as you like to say, there's that. You have to overcome the permanent income hypothesis if you're going to say this is going to stimulate spending. Then there's the idea that we're running a $2+ trillion deficit Anyway, you send me a check today, you're effectively financing that check. Doesn't matter where it came
Correct.
from, right? It don't matter if it came from tariffs, if it came from fees on something else, entry fees for national parks.
All that matters is dollar in, dollar out.
Fungible money doesn't. Yeah, you don't count where it came from. So the logical thing for me to do, there's another economic theory behind this. I won't bore you with it, with what it's called, but is for me to save it.
What is it called?
And use that with the idea of Ricardian equivalence.
You shouldn't have said that.
I know. Well,
I asked. I know it's my fault, but I'm sorry.
I tempted you, though.
I know. I'm sorry for our listeners having to go through that.
It's a great proposition, though. He basically said debt is just future taxes. So give me a tax cut today, fund it with a bond. If there's only one person in the economy, they're buying the bond with their tax cut and then paying the government back in 30 years when the bond matures with interest. That's one way to think about so-called Ricardian equivalence.
It's kind of like the idea of future you having a conversation with present you.
Yeah, exactly.
If I work out in the morning, present me is going to be really unhappy, but future me is going to love me.
And he'll be really jacked, too.
If I have 2 Twinkies in the morning, present me is thrilled. Future me, not so much. I ran up a little bit of a debt on my body.
Is 6 feet. Future you is dead, probably.
That was 2 Twinkies. Two Twinkies a day?
I don't know.
2 a day for an entire life? Actually, you might never die. You might just be preserved.
Might be short.
you might just become plastic.
Just like a Stay Puft Marshmallow.
Yeah, be fine.
Man. So there are a couple good theoretical reasons to say, beyond the usual, this is just a gimmick, what the heck are we talking about here? There are good theoretical reasons that you have to overcome, which is why it helps to step back, see what research has said about these things, what theory says about these things, and you got to overcome all. The answer may still be do it, but there's a lot of evidence working against you.
What about? Let me talk about one other piece that is the first place that I go. We have a situation right now that I think we can say because of the tariffs and how they're impacting overall purchasing decisions by both companies and individuals.
Right.
Is it safe to say that supply chains are a little disrupted now? Not to the extent they were back in 21 and 2020, but you've got businesses trying to reorient to new suppliers. You've got different things that companies are doing. Am I wrong in thinking that supply is somewhat constrained now? And if you give a bunch of money out in a situation like that and people decide to spend it, does it potentially trigger some additional inflation because you're raising demand while not making any improvements on the supply side?
Yes, it could. It could, depending on the size. You don't want to overstimulate, and sending money to people and saying, please spend it, does constitute stimulative fiscal policy. Probably not something you want to do if you think underlying inflation is elevated, which it almost certainly is, not dramatically so, but sure, Chuck. Yeah.
So this is kind of where we are, and again, just as we discuss this idea here. Let's take a quick break. When we return, Joseph Yoon from Edmunds joins us to talk about the trends we are seeing in auto loans right after this.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now, 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Alrighty, as promised, we are joined now by Joseph Yoon from Edmunds, here to talk about what they are seeing in car loans these days. Joseph, thank you so much for joining us.
Yes, of course. Nice to be here again.
Let's talk a little bit about people that are trading in vehicles. What percentage of vehicles that are traded in are underwater relative to the car loan outstanding on them?
We're looking at about 26.6% of trade-ins carrying negative equity at time of transaction, which is pretty high. It's the highest since first quarter of 2021.
Why does someone do that?
Well, typically because something happened, right? Something happened for you in your life where you had to feel, or where you feel compelled that you have to buy another car. Whether that reason is a good one or a bad one, I don't know. But something happened, and so they're like, "Oh man, I have to go get another car," but the current car that they have isn't paid off, and then they go to the dealer and be like, "Well, let's see what the numbers look like," and the numbers aren't good.
When we look at this, are we typically talking people that are, $1,000 or so underwater? Is it 10,000? What's kind of the range, the distribution that we see there?
The average amount owed on a typical underwater situation is about $6,700. The exact number is $6,754. So it's not an insignificant amount of money. And I think around a third of underwater trade-ins have between $5,000 and $10,000 of negative equity. So it's pretty significant.
Is this something that ends up kind of spiraling for people in that, hey, if you have one trade that's underwater, is it something that continues just because with cars being depreciating assets, you kind of get into this cycle and you keep having to, take out bigger and bigger loans or pay more and more in order to, basically move to your next vehicle? Or is this more of a one-time thing, or do you not have data on it?
We don't have data on it exactly, but, we obviously hope that it's a one-time thing. But in this case, these days with the APR rates as high as they are, it's very, very easy for somebody to spiral once they get into a negative equity trap. Because let's say, you owed $7,500 or something like that on this current trade-in that you're trying to make a deal on.
Sure.
So you carry that into your next loan, and then because of whatever reason, you're not getting the prime APR rate, which is already high, right? It's, I think, most APR rates for new car purchases these days is hovering around 7%. And so when you finance that much extra on top of an already expensive vehicle, typically your only option to kind of have a manageable monthly payment is to take on a longer loan, 7 years, 8 years, or even longer. And that's a long time to really commit to something. And it's very likely within that time, the car that you're trying to get a deal on right now may break down, or something else in your life is going to happen where you have to get another car, and then you find yourself in another situation a couple years down the road that, oh no, now I have to carry this negative equity into the next loan.
When you look at the let me dig into that a little bit more. How long is kind of the average vehicle owned for before being traded in? What do you see there as far as, kind of average length before trade-in?
Yeah, so the average age of the trade-in these days is around 4 years. It's 3.8 years. So, I want to give people the benefit of the doubt, round that number up. But the problem is the average length of an auto loan has been hovering around 6.
Right.
So, we're seeing a little bit of a kind of a gap there where, yes, a lot of the depreciation or the biggest part of the depreciation has already happened when you're 4 years into a loan. But at the same time, how each car depreciates is very different, right? So they're going to go into the dealership and be like, oh man, I was so close to paying this off, or I felt like I've done a great job paying this off, but at the same time, I haven't. And I owe, X $1,000 of negative equity on this car.
You mentioned that the average length of a car loan these days is around 6 years. I know that's been moving up pretty steadily. I know, when I was younger, it was, kind of 3 to 4 years was the norm. Yeah. Now it does seem like 5 to 7 is. Are we getting to the point as car prices continues to rise where we're going to be seeing like 8 to 10 year car loans out there?
I think that's a very likely possibility. Right now, a 10-year or a 9-year car loan are like extreme ends. We're seeing it in the data, but it's like an insignificant portion.
Sure.
But they are there. But what we are seeing is that I believe we're seeing a huge increase in loans that are going to be 84 months or longer. And I think that's a big signal to us that, people go into a dealer looking or with some number in mind, but because of the way that car prices have gone up and because the interest rates are so high, that number is so far away.
Yeah.
And really the only way for them to kind of meet in the middle is to be like, oh man, maybe 6 years isn't long enough for me. Maybe I need a 7-year loan. Maybe I need a 7.5-year loan.
Yep. Joseph, appreciate you joining us today. Thank you so much for all the information on this.
Yes, of course. It's always a pleasure being on.
That is Joseph Yoon from Edmunds discussing underwater car loans with us today.
Summer's here in New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little bit of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
All right, I got something for Stack Roulette here, Mark. Today, JP Morgan Chase and Coinbase announced a strategic partnership that sets a new standard for customer choice and security in the innovation economy. This collaboration includes features designed to enhance access and optionality for our mutual customers. The initial phase of this partnership includes new features for mutual customers, including... The first one's fine. Direct bank-to-wallet connection. Through JP Morgan Secure API, Chase customers will be able to seamlessly link their bank accounts to Coinbase wallets. Sure, sounds nice, fine. Transfer of Chase Ultimate Rewards points. Okay. Chase customers will be able to transfer their Chase Ultimate Rewards points to their Coinbase account at a 1-to-1 redemption ratio. This marks the first time a major credit card rewards program will be used to fund a crypto wallet. Okay, little weird, but ultimately, if you're going to take that dollar and put it into Coinbase anyways, what's the big deal?
It's found money.
Sure. Beginning this fall, the ability to use Chase credit cards on Coinbase. For the first time, customers will have the ability to fund their Coinbase accounts using Chase credit cards. You're going to let people buy crypto on credit cards?
Yeah, here we go. Next crisis brewing.
Oh, my goodness.
In so many ways, this crisis is brewing.
So here's the thing. Here's what I'm trying to figure out. If you have an investment account at a major custodian, and you have what's called a margin account on it, where you can borrow against the value of your securities. If your securities go down in value by so much, you get what's called a margin call, where they're like, hey, you got to liquidate that and pay us, put a little money in to prove that you actually have it. Okay. Is JP Morgan going to, monitor the Coinbase account such that, hey, your credit limit's being reduced if crypto has a big downward volatility period and you're not making your monthly payments?
Well, you owe what you owe, right?
You do.
Is it securitized by?
I guess this is the problem. My point is it's not. We're done for the day. Back at it tomorrow. We'll tell you all about what the Fed did then.